are they liking mostly? What is the split looking?
Firstly, thanks for having me on the show. So the asset class allocation, right, is a function of the investment acumen of their trusted source, right? I was recently reading a article by my colleague Bhuvan, which is titled as "Virtues of Youthful Stupidity." So, as per in that article, as per the WF report, it quoted that there is almost like since 2020 to 2024, the investment pattern of Gen Z, like the number of investors that are coming in has doubled. And almost 50% of the current new investors in mutual fund schemes are the Gen Z investors. So if you see, investors are one, those who do their research, their learning, and use that knowledge to invest. And the second ones are who read content available out there, right? So now there is a bust of a lot of content out there. Everyone wants to just do what their friends are telling them or what they're learning from here and there, right? So their decisions are not always right. They can make mistakes. And right now in Gen Zs, we are seeing that, and not only Gen Zs, it's a normal investment pattern where, people learn from doing mistakes. And once they become more mature investors, when the ticket size is also increases, right? Because currently the ticket size is small. Once that increases, I think they become more serious investors, and the investment patterns or the asset allocation or the investments that we are seeing boom in currently is most of them are investing in equities and funds. In mutual funds, they are liking categories such as index funds and gold funds. We have seen a lot of inflow, small caps. So
Okay, all right. So there is no definite direction that we are seeing here. Of course, there's a lot that's going matter in the society as well. But within mutual funds, you spoke about gold and small caps that they like. Is there a specific category that they like, a sector that they're looking at? What are the trends suggesting?
So we have seen a huge inflow in, equity schemes and in index funds, especially also thematic funds as well. And thematic schemes having EV exposure, right, has been an eye catcher for these investors, as what we have noticed.
Okay, so EV continues to be the big theme, not only for the industries in general who are getting on and investing there, but even for Gen Z who are looking at themes via EV where they can invest. But are they going largely for riskier investments? Is it a trend that you're seeing, or is it a mix? They are putting it into safe bets as well, and it's a mixture. They're risk averse and risk takers as well.
I think that's a normal generic investment pattern. Not here generalize whether Gen Z are more of riskier investments or everything, because right now they are in a journey where they have just started. Their ticket size is small and they are learning on how to invest, so they are trying their hands on each and every financial asset available over there, right? It cannot be generalized. So they are investing in, say, they are trying their hands in crypto, they are trying their hands in IPOs are a big boom right now. Then equity investments is somewhere, derivative investments, like everything is being tried on. So I think once they will invest, they will learn from their mistakes and or whatever is happening. I think in the future they'll become more mature investors, and we'll have to in future look at Gen Alpha on how they, their perseverance is there.
Yes, generations are changing so fast that we are hopping from millennials to Gen Z to now Gen Alpha. But what about the debt category, Neelesh? Is it not a cool investment?
I wouldn't say that debt category is uncool or is cool for Gen Z investors, because if you see, debt category is what, like low risk, low return. And if we see these Gen Z investors, right, they are someone like who are high risk, high returns, and they want to, like get benefit out of it at an early age, right? So it's something that I don't think so. It's something that they wouldn't be exploring right now. But yeah, once they become more mature investors and they learn about, allocation in a way where they are able to think about the futures, the investment pattern, I think it can be looked at that point of time. Not
Okay,
wrong.
okay, all right. Take that point.
Yeah.
And how should they go about starting investments? Is it a good time? Because we've been seeing a lot of volatility.
So I think to enter the markets is always a good time. It's never, we can't say that is it a good. Being a stable investor and putting in money time because it's for your own future, right? So small contributions right now is a monthly or a weekly SIP of 1,000 rupees also will help them because Gen Z has, like they have time frame of around 30 to 40 years right now to plan their own returns. They can like choose between investments and it's always a good time. So yeah.
It's always a good time, but yes, of course, the kind of volatility that we've seen and the correction that we've seen poses the question if it is still the good time. But take that point. Last question before I let you go, Neelesh. Any fund recommendations or any category that you would suggest a Gen Z should start or continue investing in order to reap the benefits of the they're making today?
So index funds are something that we would suggest, and gold, obviously. So maybe the Zerodha Gold ETF FOF has recently started, so that is a good scheme. And yeah, any of the index funds, I believe, is a good call right now.
Okay, all right, take that point. Thank you so much, Neelesh, for joining in today with your take on what the investment scenario looks like when it comes to Gen Z. And as you said, now we have to look at Gen Alpha. That would be the generation taking forward all these investment avenues that we are talking about. Thank you so much for joining in today with that take. With that, we'll slip into a quick break. On the other side, Paarth Dhar, the VP at Angel One, will join us to discuss Angel One's report on the saving habits of young Indians. Welcome back. You're still tuned into MF. We focused on the mutual fund investment trends with Gen Z. Let's now focus on saving habits of young Indians. There's a recent report by Nielsen and Fin1 by Angel One that shows that 80% of millennials and Gen Z save 20 to 30% of their monthly income, and nearly 4 in 5 individuals primarily save money to invest for financial securities. To understand more about the contours of this report and more, let's discuss it with Paarth Dhar, the Vice President, New Growth Opportunities at Angel One. Good afternoon. Thank you so much for joining in. Well, it's a very interesting report. I just wanted the key takeaways. What stood out for you? How many people did you sample here? And what's the biggest takeaway?
Thank you for inviting us, Sonal. Excited to share some of the insights that we had over the past few months. One is an educational initiative by Angel One that primarily works with young Indians to educate them more on financial planning, some of the investment assets that they are going to run, and charting their journey better. We recently did this survey to understand this user better, their savings habits, their investing habits, their preferences. The data partner for this survey for us was Nielsen. We surveyed about 2,000 folks and got qualified results for about 1,650, if I remember it correctly. The data, actually, the user data actually spans across various demographics, income brackets, and spans the age group of 18 to 35. So it covers people in college, people who've just started earning and are in the early phases of their career. So Gen Z, as well as some of the younger millennials. I think one data points as far as saving habits that was shocking for us. Of course, a lot of folks in investing habits, but a lot of them are consistent. Right, 80% saving about 20 to 30% of their monthly income. And remember, early on, their incomes are not as much as what you would expect them to be. So a significant portion is already going into expenses. So that was a very heartening data point that we uncovered. Other things that people also often focus on is goal-based saving, that I would want to save for a car or for a trip or for some of the other materialistic goals that probably we consider to be important for this age group. However, the data shows that most people actually invest for a sense of financial security in the future, as well as to fund future investments. So it is forward looking, a very financially mature take that people are already aware of these things way before. We can't really compare between how it was, I think, and year. Also, another interesting data point for us that we uncovered was even the folks that are 30 above identified that they first started investing at the age of 20 to 25. So right out of college, when their early incomes and early careers started. So some of these trends on savings were very interesting. Most people identified themselves as consistent savers. They had very hygiene checks when it comes to maintaining separate bank accounts. They understood the fact that they needed to keep investment options and even savings diversified across. So yeah, I think more to speak about. Happy to
Yes.
answer pointed questions.
Oh, no, yes, absolutely. Because, the idea was that maybe Gen Z is not saving enough, maybe they are spending recklessly. So this report does suggest that in the case, they are very, very mature with their investments. So let's delve deeper into this. What are some of the, I would say, features, or I would say the factors that impact their investment choice? Is there some number to that?
Yes, of course. I think when it comes to investments, the biggest that we covered was the fact that why would want when it starts for a particular person. So one, of course, they're starting off early, which is that 20 to 25. About 40% of folks start when they are in that early zone of their career. One, that means they get exposure to information and these asset classes way early than probably their earlier generation did, right? In terms of asset classes and their ranking, we asked everyone what is the most preferred investment asset class that they look for. And surprisingly, enough, stocks came out as the top choice. About 45% of the rated stocks as their number one investment first choice, followed by mutual funds, which came out about 25%. I think then we delve deeper into the reason why they would actually look for a particular investment class. The top two reasons came out to be flexibility along with higher returns. So yes, there is a direction that they are actually chasing higher returns as opposed to lower risk. And yes, the flexibility of, say, for example, lower ticket size or an SIP, sort of, and on that front, liquidity as well. That as an asset class, because stocks are liquid as opposed to some of the other folks on that particular list, that became a top choice for these folks.
Okay, so they are looking at flexibility and high returns. That's neck to neck, according to the data that you have provided. Because it's a different era, we are not comparing it with how the early generation invested as well. That time there was a lot of real estate, a lot of physical assets as well. Now that's changed, become very digital. Some of the sources from where they're getting all this education. We have been in an era of this big social media boom. What are some of the go-to places for young Indians?
Got it. Overwhelming answer, one platform, YouTube. About 62% folks actually reported that YouTube is their preferred choice as far as gaining access to financial information is concerned. The other as well, largest platform came out to be Instagram. So these are not mutually exclusive numbers. Instagram came at about 50 odd percent. Even if we assume an overlap between YouTube and Instagram, that's just social media, I am pretty sure that will cross 75% of the total number. Yes, people seek information from their network, from their friends, from their trusted advisors and family, along with some of the online education portals that have come out as initiatives. One such initiative that we run at FinOne, where we're trying to provide information free of cost, verified and authorized young Indians.
Okay, all right. So YouTube, Instagram, financial influencers, they continue to rule the roost here. What does the, in the sample size that you had, did you have a split between males, females, and the age that you had seen earlier? Is that data available? Just wanted to understand female investing patterns. Is there some trend that we're seeing there as well?
Well, not specifically. We will deep dive in subsequent reports on that particular front. But yes, there was a healthy ratio of male-female split across about, I think, 70 to 30 that we maintained as far as demographic is concerned. The deeper insights when it comes to unlocking insights at a gender level, at a tier demographic level, even at an income bracket level is something that we will disseminate in the subsequent reports that we are going to publish.
That is a different conversation than we'll have altogether. But Paarth wanted to understand that when we come to the idea of investments and, looking at flexibility and returns, we need to review the investments that we have made as well. How often is the young Indian doing that, or they invest and they forget it and it's for a long-term period that they plan these investments?
No, I think they're fairly active on that front. Pretty evident in the data. About 53% review their monthly financial situation and even goals, whether they're tracking towards it or not, monthly. So that's a majority that does it monthly. There are about 30 odd percent, covering about 90% view it actually quarterly, and then about a 10 odd percent that looks at it at an annual level. So very actively tracking using investment apps where you are able to park IPs or even able to track your portfolio, and they've taken to online and digital platforms vehemently. A majority of them actually have started using that.
Okay, very interesting. So they are basically looking at reviewing the investments they have made as well. Other than stock investments and mutual fund investments, are they looking at other classes There's so much coming up now, right? We are talking about Bitcoin, seeing that big rally. There's real.
I think can't really comment on certain other investment areas along with market factors, as you were probably hinting to. Yes, relatively as opposed to a certain then followed by savings or FDs, which are fixed income assets. Real estate or a bond, sort of an investment asset class, ranks a little lower. Could be one of the reasons tying back to higher returns, to be honest, along with flexibility. Lack of information, we are not very clear on it, but I think just because they're probably much more exposed and educated about the investment classes of stocks and mutual funds, and then identify sort of diversification, I think that became a natural choice.
Okay, all right. And of course, we mostly talk about stocks and mutual funds because, as you said, gives more flexibility. The returns have been different as well. Not saying always higher, but yes, this is a category which everyone speaks about very often. Paarth, a pleasure speaking with you. Thank you so much for joining in today and giving us all those insights and a sneak peek on what goes inside the minds of us when it comes to investments across asset categories.
Thank you so much. Hope to speak and uncover more insights in the future.
Okay, all right. That's the word coming in on where young Indians are investing, how they're saving a lot more. But that's all we have on the show today. Stay tuned for Closing Bell to take you through the last hour of trade.